Welcome back to Strongman Personal Finance. Welcome back to Strongman Personal Finance, everybody. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. And today we're going to talk about Amazon, except this is the Amazon of Africa. It's called Jumia. Mike Stathis may not like this stock because there's a certain ethnic group that, if you say the name, sounds like them. That was my piss poor attempt at a joke. Anyway, welcome back. So what is this new stock that I'm totally considering buying? It's Jumia. It is the Amazon of Africa. Let's go check it out. And by the way, I'm being sarcastic. I'm not touching this stock, and I'll show you why. Because it's in Africa, bro. So here's Jumia's website. Our mission: we believe that technology has the potential to transform everyday life in Africa for the better. We built Jumia to help consumers access millions of goods and services conveniently and at the best prices. So basically, it's an online marketplace. If you want to buy something, you go on to Jumia and you order it. You want to sell something? Well, you become a vendor on the website and you sell stuff. Now, Jumia has some similarities to Amazon. Well, some similarities, because they're an online marketplace and they're based in Africa. And they also have Jumia Pay. Jumia Pay helps people pay directly between each other using Jumia Pay. It's kind of like PayPal, you know what I'm saying? So it's an interesting concept because we know how Amazon has performed. Amazon has crushed it, the stock at least. We know similar companies to Amazon like JD and Alibaba have crushed it in China. Well, what about Africa? This is the same thing. And on top of that, the demographics of Africa are freaking insane. Like their birth rates are so high. They're going to have a massive population explosion. So as Africa becomes wealthier, which I hope it does, because I can make profits, baby. As Africa becomes wealthier and they have a massive exploding working population, and I mean enormous. Go look at the birth rates. Oh my God. There's going to be billions of people there. Companies like Jumia potentially stand to benefit. However, that's where all the good news ends. So number one, let's go look at the stock price. So it's currently at $8.14, and it has an $814 million market cap. So you would think, oh my God, the Amazon of Africa is only $814 million. Why? I thought they were taking over the world, bro. You go look at the stock performance over the last 5 years, and it's down 60% since its IPO. And that's for good reason. And we're going to see why in a second. So I pull up my trusty dusty stock analysis and I look up Jumia Technologies AG. Now, what is the first thing that I notice? Okay, so this is in Africa, right? Exploding population, underdeveloped, potentially could be highly developed, highly prosperous place at some point in the future. Look at the revenue growth. Starting in 2017, they generated $93 million or 93 million euros. 2018, pretty impressive growth. 2019, pretty impressive growth. 2020, they had a decline in growth. That makes sense. 2021, you would think their revenue would basically catch up to its historical growth rate of 38, 39%, maybe slow down a little bit, maybe compensate for 2020. However, they've only had 11% revenue growth in 2021. So for a company that's touted as the Amazon of China, or I keep saying China, of Africa, the revenue growth really isn't that impressive. Let me make sure I'm sharing my screen. Okay. So that's my first concern right there. But then I have other concerns. So I go down, and first of all, I see that gross margin is improving every single year except for 2021. That's pretty freaking good. I mean, going from 29% to 62% gross margin, that's a good sign. You want healthy gross margins that are increasing, because that makes it easier for the company to be profitable at some point in the future. If you buy a low gross margin business, which is at the top of the income statement, like Tattoo Truckers, Putrescent, Sweaty Nutsack, it's going to be hard for that company to become profitable unless they improve that. However, that's where the good news ends. Look at these operating margins. I mean, holy freaking crap. -135, -106, -142, -131, -166. Massively unprofitable. Profit margin, negative. Free cash flow, negative, 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 negative. These margins are god awful, horrible. Now with free cash flow, maybe free cash flow is low because or negative because they're investing a lot of their cash. Maybe. Let's go look at the cash flow statement. You look at operating cash flow, every single year they've burned over 100 million euros in operations. They are not making positive cash flow from their fundamental business. That's freaking nuts to me. And I think I identified a big reason why, and we'll go check it out in a second. But that's horrible. I mean, every single year they're burning cash from operations. And remember, what does that mean? If you burn cash in operations, how do you get cash? Well, you have to sell assets, which you don't want to do if you're a growing company. You have to go into debt, or you have to issue more shares. So if we go down to financing cash flow, where are they getting their money from? Well, I see these positive numbers under share issuance, and you can see they're issuing shares. Millions, hundreds of millions of euros every single year. So the dilution is freaking massive. It's horrible. Now, let's go look at the ratios. So in 2020, I guess it had a massive run up. It had a $3 billion market cap. Now it's down to 812. Jesus. There's no PE ratio, obviously, because it's unprofitable. Price to sales, I mean, I guess compared to cloud stocks, that doesn't look that expensive. Return on equity assets, return on invested capital, all negative. Earnings yield, negative. Everything's freaking negative with this company, okay? Now, let's go look at the balance sheet. So they have 512 million euros in cash equivalents, and short-term investments. These are very liquid. You can sell these or convert these to cash quickly to pay your bills. Let's go look at their current liabilities. 154 million euros. So they're not going to go out of business anytime soon. They're going to be fine in the short term, but they are burning cash. So if you think about it, this cash is going down and down and down every year. So how do they get cash? Well, they're not making it from their business. They got to raise money and they got to dilute the shareholders. So right now, terrible time to buy. Let's look at the property, plant, and equipment. They got 21 million euros of PP&E, basically no goodwill, and other long-term assets. Let's see how much of these they own free and clear. When you go to long-term debt, they have 10 million euros in long-term debt. So basically they own half of their property, plant, and equipment completely free of debt. That's not that bad. What would really concern me is if they had a bunch of long-term debt more than their long-term assets. That means they're borrowing long-term debt to pay for operations. That's horrible. You don't want to do that. So the balance sheet doesn't look that awful. Of course, you go down, well, some parts down. Of course, we can see common stock has increased massively. They're not going into debt because they're diluting the shareholders to stay alive. And you can see their retained earnings is getting more and more negative every year. When you have a net loss, you close your loss to retained earnings. If you have a profit, that increases retained earnings. If you have a loss, that decreases retained earnings. So when you see a negative retained earnings balance, that's called an accumulated deficit. That means every single year they've lost money. And you look, well, not necessarily, but they've lost more money than they've made. You look at their retained earnings, this company has had net losses total of 1.7 billion euros. 1.7 billion euros. They are losing money hand over fist. So what is my genius prediction for Jumia? What are they going to do? I think they're going to keep issuing tons and tons of shares because they don't seem to like to go into debt, which is fine. And you can see the share balance is increasing every single freaking year. Now, I was looking at their report, right? And they released their most recent quarterly report. Look at this one thing right here. So they got their revenue by avenue. They got gross profit. They got a decent gross profit. But then you look at fulfillment expense. So fulfillment is like delivering the items to the people. 24 million euros out of 47 million euros in revenue. So their fulfillment expense, just delivering their goods, basically, 51% of revenues. That's insane. They are spending so much on fulfillment. Why? That's something you have to research. Let's go look at Amazon's fulfillment expense. So their fulfillment expense in the last quarter was $20 billion. on revenue, on net sales of $116 billion. So 2271 divided by 16444. So Amazon's fulfillment expense is only 17% of revenues compared to 50%. There is a massive problem with this company when it comes to fulfillment. And it's increasing. It's not increasing as fast as revenue, but it's definitely increasing faster than gross profit, which is a freaking problem. And they also have sales and advertising expense, pretty significant part of revenues, technology and content expense, G&A, excluding stock-based compensation. They're burning money hand over fist, man. This is a very immature company. Now, yeah, orders are increasing. GMV, I don't know what that is. Revenue increased by 44%. I mean, okay. Wow, that's so great. But when you look at the bottom line profitability, how can you justify buying a stock that has a profit margin of negative 127%? This is highly, highly, highly speculative. And you are going to get diluted to kingdom come. So while, oh yeah, it's cool, Africa, exploding population, and this is the Amazon of Africa, and oh my God. No. All right. Let me do some quick comments and I'm going to go to the gym. Bump it up. Jumia. You're racist if you don't like the stock. Amazon of China is up 16 today. He's talking about Alibaba. Why do you check this stock put? I don't understand. Africa is an undervalued continent, but for now, other problems that than needing a new Amazon. I see a lot of potential in Africa, but it's could take a long time. And you don't know if Africa is going to, become super prosperous or just get torn apart by famines and wars. I don't know. So they have a massively exploding population, which may portend good things. I don't know. But for now, I'm not buying Jumia. I can tell you that. Not with those kind of profit margins and that kind of share dilution. 80% in the last month. Jumia is up 80% in the last month. Well, they're up 37% in the last month. That doesn't mean crap, though. Look at the fundamental business. I don't care if Jumia 10Xs tomorrow. The business is awful. Like that fulfillment expense, 51% of revenues. Oh, my God. That's their only marketing, the Amazon of Africa. It's a German company. Yeah, it ain't that great. I mean, maybe it has potential, but you can definitely wait. Why is this stock not bankrupt? Because they keep issuing shares. People keep giving them money. That's why it's not bankrupt. Easy as that. Okay, let's see. Madris Madero! It's Alex. Go subscribe if you like soccer. I'm not a fan of soccer or any sports besides e-games. But if you want to go check out some soccer fandom, you can go check out Madris Madero. I studied it for a couple hours and it didn't make sense. Not even getting into some basic Africa stats. Only 5 to 10% have a bank account. Yeah, this is a kind of play that's too early. Like you don't want to buy a stock that's this speculative. I mean, the story sounds great. Oh, it's Amazon of Africa, but whatever. Let's see. Any more interesting comments before I go to the gym? You think this decade will see international outperform? Since you mentioned market cycles, either way, BT, 100%. I really think international is going to crush it. But even if I'm wrong, I still have a lot of U.S. stocks too. Let's see. Expenses won't be higher than this because of it. What are you referring to? Has your view changed on Tesla after your conversation? Nope. Overvalued luxury car company. No doubt in my mind. When will we review MicroStrategy financial statement? Best trash talk in the entire... I'll check it out. I got to go to the gym because daycare at the gym's open so I can drop my son off and go get yoked. You know what I'm saying? It was at 65. You think we can get back to 20 by the end of the year? I'm done. I don't make predictions on short-term price fluctuations. I look at the fundamental business. I can't value that business. It's so unprofitable, so bad. No. No. So I'm actually putting money into my child's 529. Well, both kids now. God, so expensive. And I wonder if I can use that money to buy Jeremy's course. So when my son turns 18, Like, Dad, can I go to college? Like, son, here's your college education right here. It's Jeremy Financial Education's stupid course. You can shill Baba. Oh man, you have no idea what I'm gonna do with Baba. Oh boy, if it goes like 200-300, Baba Grift, Baba Grifter. I have a course. My YouTube channel is gonna explode. I'm gonna be rich, and I'm gonna scam everybody. Will you value some Euro-based companies one day? There are absurd ones. I mean, if you got some suggestions, you can email them to me. I mean, I'm a China shill. I'm a communist, so that's what I like to look at. The infrastructure and ad spend won't be higher than this. They said and showed they righted this ship already. I mean, even if they are, it's still too unprofitable, man. I would not touch that. Bob, what's up? I'm a genius. I'm a genius. All right, that's it, guys. I'm gonna go to the gym because I don't want to get fat. Talk to you later.